Alright guys, good evening. It's Tuesday, November 15th, 2016, and this is the daily wrap-up. Hey, sorry we missed class tonight, guys. Have some vehicle problems with my ignition key, so trying to work through that. That's why we didn't have the class tonight. Library's still not functioning, so I had a cancellation. They did send me that via email. So in light of a couple of things going on, that's why I decided to cancel or postpone until next Tuesday night. So anyway, let's get started with the wrap-up tonight. First thing we're going to do is we're going to take a look at our status of our open positions. Take a look at some new trades. Probability of rate hike in December. And then some adjustments that that we made on a couple of my trades today. So anyway, let's get right to it. Alright, here we go. First up is the Crude Strangle with 1 day to go. It expires tomorrow. So here we go. This was the weekly strangle I put on. I put it on with 7 days to go. We got tonight and tomorrow to try to trade through this thing. So this is where I'm sitting right now going into tomorrow. This is one standard deviation for a 1 day move. Crude has been all over the place. That move today was breathtaking. 6% move up at one point in time, just straight up from the lows, and just an incredible run up. So this thing will take you from one extreme to the other very, very quickly if you're trading on a short time frame. I was within 20 cents of making an adjustment with short calls, and the thing that was 42.20 just yesterday, and now it went over 46 and some change. So it's just an incredible run into not even 2 full days. So anyway, this is where we stand. I've added short puts. So I've got in the middle of this I have a straddle. Then I've got some more a put over here just to balance out the deltas going into tomorrow. So we'll see how this pans out. I'm really close to break even on this thing right now. Shouldn't take much. If it stabilizes tonight, it's going to be a whopper trade tomorrow. Do I expect it to stabilize? No. I mean, this market has been all over the place. I'm going to toy with, after this, with putting butterflies on at these break-evens, just to see what that does for me going into tomorrow. So max profit right now going into tomorrow is, wait a minute, let me see. I think it's more than, it might be a little bit more than that. Give me just a second. I thought I updated it. Yeah, that's max profit, 21. Yep, 21.58. So that's max profit going into tomorrow, and buying power's 25,670. So everything's pretty much under control. Yeah, we just like to see a little bit of flip-flop back and forth here. So let's see what we get out of this. I'm currently down 490 going into tomorrow. Not a big deal. So let's just see if she holds overnight. Alright, here's my weekly S&P strangle. We just had a blow-off move today, guys. I mean, we've gone from one extreme. The stock market it's worse than crude. Crude makes some big moves, but the stock market's just historical every time it makes a move this year. So we went 9 straight days down. We had one of the biggest rallies that we've seen since Sentiment Trader has collected data since 1898. 7 straight days up in the Dow. This market is just like a telephone pole, and if you look at the Russell, I showed you that chart. It's just like, oh my gosh! I mean, this thing is. There's some frantic buying in there. I will put this out in written text so that you have it and you can grasp it. But I will tell you guys, any down move that we get because of potential rate hike, we have got to buy this no matter how bad it looks. This market's going a lot higher down the road, guys, into next year. We started seeing those studies in Sentiment Trader, January, February, March time frame that pointed to higher prices into next year, and I'm seeing everything that Sentiment Trader's putting out right now is just really bullish going into next year. So anyway, I digressed a little bit and get back on point here with this trade. So I've got 4 days to go. I'm sorry, 3 days to go in this trade. I'm up 825. Let me double check that after. Yeah, right around 825. So we're up 825 into this trade, second day into it, and no changes, no adjustments. I just really dislike these rallies. I hate them. Alright guys, this is the crude trade going into next expiration cycle. So I have 30 days to go. These are all of the trades. This is my original trade, and these are all the adjustments. Hedges just to keep it in. The trade is in really good shape. But guys, today around lunchtime, here's where price is. Today at lunchtime, I was almost at a break even in this trade, and I turned around about an hour later and was down $4,300. And the trade is dead center of the strangle. So I had to look a couple of times. And then, without actually seeing the options or anything, it's evident that they just pumped a lot of premium into this market. So I mean, they just chunked it in there. But what they chunk in comes out. So I'm assuming they're putting premium into the market because of the next big meeting that we have, which I believe is next week. I've got to look and see. Maybe the Crude King can update us on when the next OPEC meeting is. But anyway, I like this trade right here. Right now, currently, we have, I don't think I updated that. I just want to double check myself, guys. Let's see, 11,950. Yes, so let me change this. Current, 33.5. Anytime they pump premium in, your buying power is going to go up. So, so anyway, that's where we stand with this trade right here. I'm in good shape. I like the position. So now I just continue to monitor and see when theta comes out. Nothing else to do on this trade right here. But yeah, we're down 4,200 bucks in it, primarily because of theta. And again, I haven't had a profitable day in this thing. I've been in it 25 days and not a profitable day since day one. This thing has just been in drawdown right from the get-go. So, most of the time, guys, we get it right. We put these trades on, theta comes out. This one has just either steadily increased in theta, or we've gotten these huge moves in the market, which has caused us to hedge, which means you're going to have to stay in the trade longer. So I just want to stomp my foot with that. Anytime we get in there and dink around with it and start adjusting deltas, we're forcing ourselves to stay in the trade longer. But I really like this position right here, so I couldn't be happier with it. Alright, this is in the retirement account. You'll notice yesterday I showed you I had a broken wing butterfly, and I was going to put I had an at the money butterfly in the queue at the 2165 level. Well, that kicked in today, so I adjusted this broken wing butterfly. Here are the strikes for the at the money butterfly that I used to adjust this. So all I did was I raised this portion right here up. This little portion right here is what I raised up. Before it was, you had the peak, it went down, and then came across. So all we did was raise it up. But that, 18 handle rally today. Now we're up 3, 4 more. So, it's gone up 22 handles since we put this trade on. Yeah, 22 handles. It was below 64 yesterday when I was tinkering around with it. It's touched 83 and some change. So yeah, we've just had another monster rally on top of monster rallies on top of monster rallies. So it's just the way the rally side goes in this market. We look good right here. The next adjustment to raise this even more is for me to add a debit spread. So I'm going to see if we get any red on the board tonight, which is highly unlikely. I think we're in that mode again, guys. I don't want to believe it because we've had such a huge run up, 160 some points off the low in a day and a half. But I know we've got another 140 more to go in this market. Maybe more than that. Every extension, this thing goes from a low to a high, stretches more and more. So we could have very easily another 150 to the upside before this thing rolls over again. Just an incredible bull market that we're in here. But anyway, getting back to this trade, I left this in over here on this side. This is what I showed you last night. This is what it looked hypothetically. This is how it looks real time. So just so you can see the difference between hypothetical, theoretical, what we had here, and then real time, what we actually have after the trade kicks in. Love this trade. You're in good shape. We have 39 days to go. We're currently up 590. So we can build this up a little bit more, still leave ourselves a big cushion down here to the downside, and I think it's going to be a really nice trade. If I can get this leg up, my goal is to try to get this leg up to where I'm at least $1,200 to the good on it. So that way it can just run to the moon and we're up 1,200 no matter what. That's what my objective is here. Iron Condor, I really don't like this position simply because I just believe the worst could happen, which is the risk is to the upside. So I'm going to assess. I'm not going to do anything right now because I still have time, but I'm at a decision point. And my decision point means that I go in there and I lay down some courses of action to potentially mitigate an upside, the upside risk. So, we've got 25 days to go in this thing, and we're down 1170. Not worried about that. I'm just worried about it being up here and how much this market can rip higher from this point. So anyway, trade alert for this right here, or I should say code Amber for the Iron Condor. But we're going to get in there no later than Thursday and make an adjustment, especially if we get more up moves tomorrow. Alright guys, let's see here. I wanted to... Where did it go? I thought I had it. Yeah, here we go. Got it. Wanted to show you this. This has been trending higher ever since I showed it to you weeks ago. This is the Fed Fund Futures Fed Watch tool. Traders look at this to see how accurate it is about predicting interest rate hikes. I don't have enough data to make a guess one way or the other. But right now what it's telling us is there is a 90% chance that the Feds are going to raise on December 14th. I'm not sure that I've seen it that high here recently, but 90% is definitely high. When I showed it to you a couple weeks ago, it was 68. About a week ago, it was like 81. Now it's 90. So it's continually trending higher. Anyway, just wanted you to take a look at that. We're going to keep watching. Again, like I said, guys, I don't have enough data to tell you whether or not this is a fade or whether this is a go with. But they've been pretty accurate so far in predicting no interest rate hikes. We'll have to see how accurate this tool is at actually predicting interest rate hikes. So see what else we have here. You guys, I think that's it for the night. I don't really have anything else to show you. Just watch your crude trades. We've got that. We've got the OPEC meeting coming up. Um, a month from now we have the Fed meeting, so that's looks like the scales are tipping toward a potential rate hike. The stock market is not indicating that. The bond market is telling us that, hey, they very well could raise interest rates. The bond market has collapsed in front of this meeting, so it's not. Getting back to the old days, the bond market would tip the hand on what the Fed was going to do. Somehow the bond markets were very good predictors about what the Fed was going to do. I don't know if we're returning back to those times or not, but anyway, this is it's worth looking at. We'll gauge it as we go forward. It's just interesting. Not don't know anything else about it. It's just interesting to watch. So yeah, guys, that's it. Just keep it in the road. This is BA signing out. We'll talk to you tomorrow.